Welcome back, guys. So in the last video we have seen how to decode and read an income statement. In this video we will see about balance sheet. Balance sheet is a snapshot of a company's assets and liabilities at a single point of time. This is the consolidated balance sheet of Sequent Scientific Limited for the financial year 1920, and here we can see at the top right all amounts are in millions, that is 10 lakhs unless otherwise stated. So the figures which they are mentioned in the statement, the base value will be 10 lakhs. Balance sheet have two parts. One is asset part and other one is equities and liabilities part. As we know the accounting equation, assets equal to equity plus liabilities. So what is an asset? Asset is something that which we can convert it into cash for the future purpose, and liabilities are something like which we have to spend money on them. If you buy a gold, it is an asset. If you have a loan, it is a liability. We will see one by one. Assets and liabilities have non-current and current parts. So we will start with non-current assets. Non-current assets have life more than a year and they cannot be converted to cash easily. So the first one, property, plant and equipment. These three things comes under assets because all these three things are the asset of a company, because they are fixed and their value will be increased or decreased, but they will be remain with the company forever. So that's why they are in the non-current part. Capital work in progress. After the work is completed, they will be coming under to the A, like property, plant and equipment. So as they are in progress, so they are in this category. Next, goodwill. Goodwill is a thing like a company's reputed name, which is also an asset, because if any other company tries to buy this company, goodwill will be the one of the major important factor to consider for the valuation, because the more the name, the more the value for the company. So that is what a goodwill means. Next, other intangible assets. Other intangible assets means like brands, marketing, trademarks, all comes under this category. Next, intangible assets under development. So the same, like see, after development they will be coming under the intangible assets part. Next, F, financial assets. In that, investments. Investments are mainly into the stocks and equities and other. So these are meant for long term. So that is why they are in the non-current assets part. Next, other financial assets. So in other financial assets part, these are security deposits and margin money deposits. Like if you are in a trade with some other company, like if you are buying raw materials or you are giving vendors the products, so they will be depositing some money with your company for the future trade purpose. So that will be an asset to the company. So these will be coming under the non-current assets part. Next, deferred tax and income tax assets. In the previous video, in the income statement, I have told you about income tax and deferred tax. So in the deferred tax, I have told you that there will be some tax slabs. If they pay some extra taxes, they will be reversing to the company. So these will be coming under this category. So same as the income tax also. The next, non-current assets part. These are capital deposit and deposit with government securities. If you are starting any company or having a company, you should have some deposits and some securities with the government authorities, because like environmental clearances and other fire department, etc. So these security deposits and capital deposit with government authorities will be coming under this other non-current assets part. They will be remaining for the lifetime, so they are under the non-current assets part. So the total non-current assets are accounting up to 8141.65. So next, current assets part. Current assets have a life less than a year and easily converted into the cash. Because their life is less than a year, so in the coming financial year they can be easily converted to the cash and they can be shown in the income statement for the entire financial year. So first one, inventories. Inventories are the things which companies having the raw materials, finished goods or stock in trade. All these other things will be coming under this category. So the same part have been shown in the income statement, but why in the balance sheet? Because the balance sheet is calculated for one single point of time. Up to that single point of time, these raw materials, finished goods and stock in trade will be with the company. So they will be showing here in this inventories part. Next, financial assets, investments. These are the short-term investments like mutual funds and short-term stocks. All will be coming under this category. Trade receivables. Trade receivables are the things which company owns with other parties. Like Sequent Scientific is selling its product to some of its clients. So after reaching the goods, they will be paying some money, or some will be holding the payments for some credit rate or some many days. So the amount which is due to the Sequent Scientific will be coming under this trade receivables. Because they have to be received, they will be coming under the assets part. Next, cash and cash equivalents. These are the deposits with the banks which Sequent Scientific has deposited in the banks for the future purposes. Next, bank balances other than cash and cash equivalents. It is number 3. So these are the unpaid dividend accounts and margin money deposits and bank guarantees. So all these things, undividend accounts, like in the sense like in the previous financial year, some have not claimed the dividends, or due to some mistakes and errors of some paperwork, the dividend amount is remained with the company. This will be coming under this category. Margin money deposits and bank guarantees are somewhat like Sequent Scientific is deposited with the banks for giving a guarantee to its vendors and other parties. So this will be coming under the bank balances other than 3 above. Next, loans. Actually, loan is a liabilities part, but when a company gives loan to others or its employees, that will be coming under this assets part. So these are the loans which company gives to its employees or some other parties. So this will be coming under the current assets part. Next, other financial assets. These are the interests on fixed deposits and foreign exchange contracts like options and futures for the future purpose. So these will be coming under this part. So other current assets are the balances with government over securities, like they will be investing in bonds or some other things, prepaid expenses, advanced to suppliers raw materials. So all these coming under this other current assets part. So the total current assets are 7041.37. The combined total assets means total non-current assets plus total current assets is 15,183.02. So next, equities and liabilities part. Coming to this, first one, equity. Equity, share capital. It is the initial capital raised by promoters and IPOs and other parties. Next one, other equity. It is the capital reserve, treasury and securities account. These things will be coming under this category. Other equity will be changing from year to year, but equity share capital will be remain constant unless and until some other parties have invested in this company some extra amount. Next, equity attributable to owner's company is total this A plus B, that is 7427.6. Next, see non-controlling interest. Non-controlling interest is the dividend outflow for the previous financial year and share profit of the year and the forex differences. So these things will be coming under this category. So the forex, in the sense like Sequent Scientific is operating in more than 3 to 4 countries. So if you make a trade with other countries, so when the goods reaching from one country to another country, so there will be a difference between two countries foreign exchange rates. So in order to maintain that, they will be hedging the position. So the total equity is 7874.97. Next, liabilities part. In the liabilities part, first one, non-current liabilities. This is the liabilities which these are meant for the long term and have a life more than a year. First one, financial liabilities. In that, borrowings. These are the long-term loans which company has a liability for the long term, means over an year. So for the years in the period, they have to pay the interest and loan amount or EMIs. So this will be coming under this. So next one, other financial liabilities. These are the put option liabilities and lease liabilities. Like the company rents some sites and buildings, so the amount which they pay for the lease will be coming under this other financial liabilities. Next, provisions. These are the gratuity and termination benefits for the employees, leave compensations, and for the retired employees. These are the long term because this is calculated the year after year, so every year they have to pay for the employees. So these will be coming under these non-current parts. Next, deferred tax liabilities. These are the tax differences which the Sequent Scientific have to pay to the government in the form of tax. So other non-current liabilities they have not stated here, which is 13.13. So the total non-current liabilities is 2612.06. So next, current liabilities. So the liabilities meant for the short term, like less than a year, will be coming under this category. So first one, borrowings. These are the short term borrowings. They have a lifespan for the less than a year, so this company will be clearing the loan for less than a year, so that will be coming under this. Next, trade payables. Trade payables is a thing that Sequent Scientific have to pay to its vendors for raw materials. So after receiving the products, they will be holding some money for the quality check and quality control of the raw material. Only after that they will be paying the money. So the trade payables will be coming under the liabilities part because they have to pay within a year. So next, other financial liabilities. These are the foreign exchange contracts and payables on purchase of property, plant and equipments. Also the current maturities of long-term borrowings and unclaimed dividends from other companies and interest on the long terms. All these will be coming under this other financial liabilities. Next, provisions, which is gratuity and termination benefits and leave compensation. So we have seen the provisions in the non-current part also. So here again in the current liabilities part, both are the same, but that is meant for the long term and this is meant for the short term. Next, current tax liabilities. This is the current tax that should be paid in this year or paid in the previous year. Next, other current liabilities. These are the advances from the customers, like if they order some bulk drugs or bulk formulations, so they have to pay some advance to the Sequent Scientific. So all these advances will be coming under this category. So the total current liabilities are 4695.99 and the total liabilities are 7308.5, which is non-current liabilities plus current liabilities. So the combined equities and liabilities part is 15,183.02. Thanks a lot guys for watching the video. So in the next video I will be telling about how to decode a balance sheet and cash flow statements also. So cash flow statement is a small part, so I will be combining these two things in one video. Stay tuned to my channel. Please like and subscribe my channel and follow us for more videos. If you find any difficulties in listening to the audio or something which you feel difficult in watching the video, please do comment in the comment box so that I can rectify in my next videos. Thanks a lot.